Hi, everyone. Welcome to Logtech Live, the first Logtech of 2024. Happy New Year. 2024 totally sounds like a made up year from the future. I don't know why this year in particular is striking me that way because obviously we've been in the 2000s for a very long time now, but 2024 just seems like a year from a sci-fi movie that I watched in the 1980s or 90s. So we are in the future officially now, and there's no better place to talk about the future than a show about logistics technology, right? So if this is your first episode, you picked a great one. I always say that, but I really mean it this time. We're going to have a fantastic discussion today. If you are a longtime supporter and viewer, welcome back. Hope your holidays were restful and enjoyable, and you got to catch up with family and do fun things. Last episode, I was actually in Cancun. I was like literally going from the show to a beach. I can't say the same thing now. I'm back in frosty DC today, but super excited to be with you all wherever you may be today. A few things wanted to highlight. We are less than 2 months from TPM, which is super exciting and also terrifying at the same time, just given how much stuff there still is to do for myself and my colleagues. But that said, it's going to be a truly amazing conference. The agenda just keeps getting stronger and stronger. We have Robert Gates, who is going to keynote, former defense secretary for the U.S., obviously a extremely timely speaker, given all of the geopolitical stuff that's going on around the world in various theaters, and how that relates to the global economy and the world that we all play in, global logistics. So super relevant. We have Mark Levinson, who the author of The Box, the book that everybody, the Bible of container shipping, the book that everybody has to read when you get into this industry. He is actually going to be talking about it and about where the container shipping industry goes from here. I, of course, will be leading a whole number of sessions around logistics technology within TPM Tech, which is now part of TPM. So I think there's something like 12 to 15 sessions that I'll be leading around that. If you have not registered already, you can use the code EJTPM25 to get 25% off of a registration pass. So definitely encourage you to do that if you haven't. We're now, in 2024, just a few weeks away. So I'm really excited to see everyone in Long Beach. It's going to be bigger and better than ever. Blended pledge. This is my favorite topic. I bring this up every show. Please support the blended pledge. In the comments, you can find out more about it. This is to make sure that underrepresented groups within the logistics industry are represented at major events like TPM, that they're able to cover travel costs in case they are not able to support those themselves. If it's a small company and they lack the budget, if it's a big company and the person doesn't have the travel budget approval, which a lot of companies are struggling with right now, right? Like everybody's looking, even though the economy seems to be doing okay in the US, especially, everybody's pretty cost conscious. So this is a great initiative that Sarah and the Let's Talk Supply Chain team has put together. Please support it. $5, $5 million, whatever you can spare. All right, let's get into it. News of the week. No shortage of super newsy topics this week. I'm going to save the Red Sea for the last, so you got to bear with me on this. I actually did a story. It's not really a story. It was more of a column last week in that tricky period between Christmas and New Year's where most people are out, some people are in, but they're kind of like trying to take care of all the housekeeping and get rid of all the stuff off their desk before the New Year starts. And then some people are just, doing work like it's a normal week of work. In any case, I posted this last week, or we posted this last week, and I sort of took a look back at what was a very tumultuous 2023 and asked a question that's been kicking around in my head for 6 months, and something we'll talk about with our guest in a bit. Is VC appropriate, or is it aligned well with the logistics industry? And I say that, and this is something I explore in this piece, is if the logistics industry traditionally functions on long sales cycles and it's innately fragmented industry, and it's a lot of its participants operate on very thin margins, does that align with the expectations that venture capital investors have for businesses trying to sell into that space? That's what I tried to get at here, based on now covering this for the better part of 11 to 12 years in terms of VC's impact on logistics. So got a lot of attention on LinkedIn. And obviously there was a lot of strong opinions both ways about this. So definitely encourage you to read the story. Go to LinkedIn. I've made a post about it. There's a ton of great comments on that LinkedIn post that provide a little bit of the depth that I wasn't able to get into here, like different types of venture investors, corporate versus traditional, early stage versus late stage. It's not monolithic. There's lots of different angles to this, which we've explored a lot on this show. I've had a bunch of different investors on, and they would probably disagree with the premise of this article, but that's fine. That's what this is all about. We're dissecting issues and coming to conclusions based on perspectives on things. So definitely encourage you to read this. This was fun to put together. Got kind of get it off my chest and like get people's opinion on it. So next story is another piece I did last week out of a LinkedIn post that I read by my good friend Pete Mento, who is a trade compliance savant. He's with DSV now, but he's been in the industry forever, been in a million roles, forgotten more about this stuff than I will ever know by light years. He posted something very interesting about a ruling that CBP made very quietly in mid-December, suggesting that customs brokers were not going to be allowed to use offshore help to sort of assist on the data side with things like customs entries and invoices and commercial invoice and other things that were considered quote unquote customs business. So this story gets into that and takes some feedback includes some feedback from some trade compliance experts about what the ruling means and where it goes from here, and how it's sort of the conclusion of a series of rulings that CBP's made that sort of insinuate that this work needs to be done by licensed customs brokers or under the direct supervision of licensed customs brokers, and it needs to happen in U.S. territory, so it can't be offshore. How far and wide that goes is up for debate, right? Like if you're a global freight forwarder and you have a customs broker, customs brokerage division, and you have people in your offices abroad entering data to support a shipment from that origin to be imported into the US, do those people offshore, does that sort of violate this? Or are we talking about a third party offshore setup to set up for cost efficiency and to minimize costs associated with compiling an entry? All sorts of things that I'm going to get into in future coverage of this because I think it's super interesting. So definitely encourage you to read that story. And then the last story, I alluded to it. This is the latest piece. It will not be, by the time we're doing this show, there will probably be another story up on the Journal of Commerce about Red Sea issues and its spider webbing out into various trade lanes. This is my colleague Greg Noller taking a temperature check on the how closure of the Red Sea, or not closure, but constraints on the Red Sea forced by Houthi rebels going after commercial vessels that are transiting the Red Sea to the Suez, how that's impacting not just rates, but also space, capacity, and equipment, right? Like if there are 5,000 containers routing around Africa, that's going to soak up the containers as well as capacity aboard the vessel. So there's lots of sort of red flags around things that shippers that aren't even on Asia, Europe, or Southeast Asia to US East Coast, or any of the trades that rely upon the Suez, that they're going to have to think about now as this continues on. We're now into about the third or fourth week of this. So all right, well, it is time to bring on my guest this week. Joining me today is Graham Parker, who is CEO of a company called ShipAngel. Many people might also know Graham from the previous company he founded and sold called Containers with a K. Graham, it is awesome to have you on. I've been wanting to have you on for a very long time, and it felt right to have you on to start the new year. Little did I know that it would be super relevant because you are, which I'm sure you'll get into in a second, but you are involved in software that helps shippers manage freight rates. And boy, freight rates have started to go a little wonky over the past couple months, reminiscent of COVID. But before we get into all of that, do you want to give a little bit of background on yourself for people who aren't familiar, and then we can jump into a million questions I have.
Yeah, sure. So I started my career on the pure freight side. And then, as you mentioned, in 2014, I was co-founder and CEO of Containers with a K, that built front-end solutions for carriers and freight forwarders. And we sold that company to Descartes Systems in 2020, and spent some time there during COVID, obviously. And then in literally this time last year, or almost this time last year, founded ShipAngel as a SaaS company for building software for BCO shippers. And first product to market is rate management, which, like you said, right now is like really interesting. We're seeing like obviously a record number of changes on freight rates, surcharges that didn't exist a month ago. So it's super interesting.
Yeah. So and when I asked you, obviously the Red Sea stuff was happening, but I didn't know it was going to be so it was going to have such legs. So we'll definitely get into that in a second. What is ShipAngel? What was the idea? How did you come across this idea? Especially coming off of what you had built with Containers, and maybe give people a little bit of background on what Containers was before you jump into ShipAngel.
Yeah, so Containers was kind of like around 2016, 2017 when you started to see a real kind of spike in digitization and growth within freight and supply chain. Containers was basically a front-end execution layer. And we were pretty much a bootstrap company. We never raised any venture capital. So we were concentrating on a small segment of the market, which was actually the large part, the enterprise ones. So we basically had a relatively unique offering back then. It was a front-end customized own branded platform live in 12 weeks. And we did it for, many of the top 10 carriers, like I think the ones that are public are like Maersk and Zim and O&E. And it was a super interesting journey. We built up a really strong reputation and obviously had a lot of big forwarders working with us as well. And then, kind of by 2019, we were still in the bigger scheme of freight tech startups, relatively small. We were like 15, 16 people, bootstrapped, as I said, and there was an opportunity from kind of multiple suitors to take an exit under our belt. So we decided it was a good time to do that. But I always had in my mind to, go and build a bigger business as well. It feels like, there's still a decade or maybe more of freight tech companies to be built when you look at the opportunities in the ecosystem. So in December and January last year, December 22, January 23, I spoke to 100 BCOs from all over the world, primarily US, but also Europe and a little bit Asia, and just tried to get a kind of an understanding of what kind of problems they had. And, during that journey, I also kind of like appreciated just how big the BCO market is. Like, you're talking about, US importers and exporters, somewhere between 1 and 2 million companies a year. And, the other interesting piece from the learning when we looked through all of the problems that needed solutions was we felt that there was an opportunity for a modern SaaS brand that can deliver certain products in a timely manner. The average US medium company has 112, 115 SaaS apps. And a lot of those applications are like Asana or Canva, where you sign up with a credit card and 1 hour later you're live, or a team in your business is live. So that's a big part of what we do. So we wanted to kind of build solutions, and we kept on hearing about advancements in technology for procurement, and obviously visibility was a huge area, but there was just this piece in the middle where shippers are managing rates, and I think 82 out of the 100 I spoke to were using Excel, and I was just blown away. I thought the number would be closer to 50 or less. So it felt like a great opportunity.
I'm surprised it wasn't closer to 100, honestly. So
yeah,
you must have found a very elite group.
Yeah, there are obviously, you know, some solutions, but I think traditionally rate management solutions in the industry, if you look at, you know, companies like Portrix and Cargosphere, they've been aimed mainly at freight forwarders, which kind of makes sense, because if you're building rate management for freight forwarders, in essence, it could be more difficult. It could be perceived to be more difficult, because if you're a forwarder, you have everyone's rates to manage. If you're a BCO, you're just managing your own rates.
Right. So when you first talked to me about this new thing you were doing, where we were kind of both collectively trying to get our arms around like what the size of the BCO market was, and you know, JOC publishes this list every year of top 100 importers, exporters, and obviously everybody wants a piece of that because that's the volume play. But on the back end, there's that, you know, literally hundreds of thousands of BCOs that might be moving one container a month, right? And I've been covering rate management tools for almost the entirety of my career, even before I started focusing on tech. Companies like Catapult and Cargosphere, like you mentioned, and Portrix, which have all been acquired now by larger software suites to show, you know, how important they actually are. But they were all targeted at the forwarder market and the NVO market. And I always saw that, as you sort of alluded to, as it's not just that they're aggregating all of these rates across a bunch of different shippers. They are having to be, as forwarders are on a number of different dimensions, they're having to be the consumer of the rates and the provider of the rates, right? So it seemed to be like a good hub spot, but then it doesn't mean that the shipper doesn't struggle mightily themselves with the ability to manage their own rates, especially if you have a kind of complicated network or you're working with a lot of different providers, right? So I was always curious why nothing ever seemed to stick, or really why no one even really tried to build a rate management kind of like category for shippers. So that's what always stuck out as very interesting when you first brought this up. Why do you think that the market didn't evolve to sort of cater to shippers in the way that it has to forwarders and NVOs from a rate management perspective?
I think if you look at like the last decade, like say the kind of 2013 to 2022 timeframe, like the first batch of rate tech companies, like you mentioned, there was a bunch of successful ones that built rate management tools, and all were acquired since. And yeah, like it's clearly a bigger problem for a freight forwarder. But you know what I found sitting with a lot of these shippers was, you know, when you try to manage complex rate, you know, rates have become more and more complicated. You know, surcharges have become more complicated. You know, you've got rates with multiple currencies, and you know, trying to manage that in Excel over the last few years, you know, exasperated by COVID, but even pre-COVID, just became too difficult. And you know, I sat in some shippers' offices, and they would have a file, and they would click on the file, and then there would be week numbers 1 to 52, and they would click on week 7, and every week 7 had 15 rate files, and then an Excel compiling that. And it was just, you know, it was clear that there was complexity for them. Yeah. So trying to understand what their rate was, what the surcharges were, how do you pick the best option? If you're looking at a large Excel sheet and you are trying to find, you know, the fastest transit, or you're trying to utilize CO2 or find out is the rate good versus benchmarking, it's impossible to do that in Excel. And, you know, Excel, if you look at, you know, kind of the unbundling of Excel over the last kind of, you know, since .com, you had Salesforce, first of all, kind of taking CRMs off spreadsheets. And now, you know, everybody uses a CRM instead of a spreadsheet. And you had a similar kind of journey with the project management tools like, you know, Asana and Basecamp, where people just couldn't manage complex projects on spreadsheets anymore, so they moved into the genre of software, and we feel the same about kind of rate management. So we felt, looking at that type of complexity of sitting and looking at these folders upon folders upon folders, that there was an opportunity, given the ecosystem of where we are in technology. Like you said, Eric, nobody really had tried it. So, we wanted to reimagine it from the ground up and, build in, benchmarking and CO2 and live transits and help them make the best freight decision. So it felt like the time was right.
So first of all, that example you brought up where the week 7, tab opened up a whole nother can of worms. It's so interesting you bring that up. I for the life of me, I cannot understand how the industry evolved to like call to sort of categorize things by weeks instead of like calendar dates. Like there's no other walk of life where we would go, oh, we're in week 38, right? Like, and like, which month is that again? So that's an aside, but very window into like unneeded complexity that kind of gets introduced into things. Maybe I feel like we need to step back a little bit for people who maybe aren't familiar. Can you give like the very high level definition of what rate management is? It sounds like it's sort of obvious and intuitive, but I think it's important to like explain what rate management software is and isn't. So,
yeah, I think in as you mentioned, it's hard to believe it's 2024, but in 2024, it's a single source of truth for your global shipping rates. So it's a place where you can go and you can see all of your rates. And if you're a medium or large organization and you type in, Ningbo to Norfolk, you want to be able to see your long-term contracts. We see a lot of people mirroring long-term contracts with short-term contracts. So your long-term, your short-term is there, your spot options are there. If one of your regional offices has got a rate, that's showing up. You have a degree of confidence that all of the surcharges are there. If it's a door-to-door move, your Chinese yuan local charges are there, your US destination charges are there. And that's the first part. And then I think the second part is that when you have a single source of truth platform, you can enrich those rates with data to help you make the best freight decision. So, again, the example that always struck me was I was sitting with a BCO and they had like a giant spreadsheet with like 400 lines and they're like, oh, this is a very urgent shipment. And I was like, how are you picking the fastest transit from? And they were like, I don't know, like, it's just going with this carrier. So there's an opportunity to like enrich the rates then once you have them in a single source of truth with live transit times, live benchmarks, CO2, a bunch of filters, and help them make the best freight decision for every single shipment. That's the way we see rate management now.
There's the corollary to that is allocation management, especially on the shipper side of things, is how do you make sure a good rate with a great transit time might not be the best option at a given point in the calendar because you may have a ton of allocation with a forwarder or a carrier that you need to work through that might be a little bit more expensive than the one that you're about to run out of their allocation with. So all sorts of nuances to this.
Yeah, absolutely. And that's one that comes up a lot. And, we see, our customers when they're making decisions now, sometimes they'll say, I have this trade lane and for the rest of this quarter, it's an opportunity to use the greenest option. And then they can, kind of get their carbon certificates and utilize pretty much dollar savings. And like you said, sometimes it's about, I'm not going to book this rate because I don't have any more space left on my CMA contract, or vice versa. I have a ton of space left on my Maersk contract. I better start working this down. I don't want to be in December and have, 400 TUs left.
Yeah. It's a far more complicated picture. I think most people tend to think like rates are, like you're just shopping for things on Expedia, and it's absolutely so multidimensional. If you're sitting in the chair of a logistics director trying to manage all of these different variables at any given time, and then the Red Sea explodes, and all of your careful planning, especially at the end of the year, must have been
Yeah.
absolutely crazy, right? You have ships diverting, you have sailings and port calls being canceled, and you had probably said, oh, well, this is my best transit, I'm going to use up the rest of my allocation, this is the greenest transit, and now all of a sudden you're sailing around the Cape,
Yeah.
and probably paying some surcharges if you're not in a position where your contract kind of said no to those. It's incredibly complicated, and that's, to me,
Yeah.
that's what's been so interesting, that there's not been more of a direct focus on the shipper end of this, and it's been almost purely around the forwarder. So super interesting what you're doing.
Yeah, it's definitely, like you said, Eric, you could be looking at, you could log on to the platform in first week of December and look at a solution, and now log on today and it's totally different, like the CO2 element. And I think that's why there's a kind of importance on the shipper side to make the best freight decision, but also knowing that you've got to have like a real-time view into it, because this is a perfect example of, what was the right option 2 weeks ago could be the worst option today.
Yeah.
So it's becoming more important. And I do think as well, like the shipper BCO market, there was a McKinsey report recently where they looked at budgets, going into 2024. And I think it was like above 80% of shippers are increasing budgets. And when we talk to customers every day, and like, there is definitely post-COVID, obviously that was super scary. And a lot of them kind of, saw gaps within the supply chain, and they are continuing to invest even in the, the macro environment that we see now in the economy. It's just clear that they're continuing, and they're on, a lot of them are on a journey to continue to digitize their supply chains. And, for companies like ShipAngel, but everyone in the industry, budgets are going up. Like, there are opportunities there.
Yep. Well, let me shift gears a little bit. I in the intro bit, I referenced a story I did, or a column. I keep saying story. It was a column last week about the impact of VC in logistics, and less so almost about the impact, because like there's a 1,000 companies that have been founded that have not touched VC, never even considered using VC in some cases. But there's obviously a lot that have. And I've been thinking about this for a while. Do the expectations of VC investors align with the realities of the logistics market? And we were talking about this. So I'm interested to get your views about whether broadly that premise is accurate, wrong, depends. What's your take on that?
Yeah, I think like the market is obviously absolutely enormous, and there's lots of different kind of sectors within freight tech. But I think, I think almost everyone would agree that we are in the middle of a once in a generation, move towards digitization. And clearly that is going to create some very successful companies that are worth hundreds of millions, companies that are worth billions. And like you say, some of them might be venture backed and some may not. But I think it's clear that, there's still a lot of opportunity. If you look at the companies that need to be built in this sector, I think there's a lot of problems that are not fully solved yet, that I think, maybe 5 years ago I thought would be by now. Some of them are on the right path. But also I think, from our point of view in this industry, like I've spent a lot of time kind of in, talking to friends in the software world. And, if we take a step back, like this industry is enormous, and, people always throw around, it's $1 trillion industry and everything else. But, there is, a lot of, if you look at Uber as an example, like Uber raised 20 billion before they went public, and they're now just about a profitable public company. And they're a successful company. I think that there definitely is an opportunity for VC backed companies in this sector. And I think that, the point I made earlier about SaaS as an example, like a lot of people talk about traditionally that there has been very long lead times. And in certain cases, that's always going to be the case. If you're selling a TMS or an ERP, customers are making the decision once a decade, and it's pivotal to their business. But, for lighter weight solutions, we see customers making decisions much faster. And that kind of alludes to, building successful companies. The important thing with venture capital, and the trickiest thing, is deploying the capital with a return, and building a business. Like if you raise 100 million and you've got a 300 million valuation, the expectation is you're going to be worth, $750 million or $1 billion. So deploying it, at scale is super challenging. And I think, obviously people talk a lot about Flexport, and it's challenging to build, in that sector when you look at, the valuations that forwarders trade at 1.2, 1.5 times total sales. So I think there are a lot of opportunities, and I'm very excited about the ecosystem. I've done some angel investing over the last few years, and there's just some incredible young SaaS companies coming up in freight tech that are growing at a venture kind of pace, and I do think that there is a sector of it that it can be very successful with a venture backed model.
So there were a lot of different dimensions that you just addressed, and there's some that in the story that I pointed people to, like overhiring. Like I think one thing I didn't get into in the story that I think I myself am trying to be mindful of is not getting too high and too low at any point in the sort of cycle of things, because things went crazy in 2021, right? Like there was obviously a lot of money sloshing around. Everybody was getting funding. The valuations were high. Hiring was going crazy. Last year felt like a significant correction, and you can have that recency bias where you're like, oh, well, now this is the trajectory. And it's like, no, it's going to recover again. Like it will stabilize, and then people will be optimistic again, and money will loosen up again. And so it's important for me, at least covering the space, to not get too high and too low. But I do think, like, I'm trying to think of how many companies in logistics software that have sold for forget $1 billion, like $1 billion. Forget that. Like, let's talk 5, 10 billion, right? Like it's not more than one hand so far. Now, maybe that changes down the road, but that to me is the biggest challenge that investors have to overcome, is that we've not yet seen anything. We've not yet had, like, forget about $1 billion exit. We've not even had, there's no like $20 billion exit. There's no like, oh, that is the path. We just need 1 or 2 of those. Right. So, and I don't know, like so this is another thing I wanted to get into you with. It's like, do you think you said that you would have expected 5 years ago, you would have expected us to be further along in certain areas? Is it that the software wasn't good enough for us to be where you thought we might be, yourself included maybe? Or was it that adoption is the problem? Or is there some other fundamental things about the market that prevent that growth from happening that you might have expected 5 years ago?
Yeah, I think, if you look at like the hundreds of successful software companies on the SaaS side, let's say over the last number of years, like when I was, doing my interviews with the shippers and the BCOs, I also spent some time in some friends' companies that were at Series B and Series C. And these would be like best in class companies producing world-class software. And, if you look at kind of, how fast they develop products, how easy they are to use, how implementation light they are, it did kind of make me feel like, are we, because, what I heard a lot of was like, sometimes, you don't need to build, kind of like world-class SaaS software in this industry to be successful. And I'm sure that's the case, but, particularly on the shipper and BCO market, when we're talking to customers, they love modern UI, UX. They're buying SaaS applications every day. And, there's a need for the products to be great, for them to be super successful. And I do wonder, like, if the industry has kind of has quite got there on the software side, when you look at, again, kind of the pace that some of these kind of SaaS companies have been moving at. And I mean, it's never been cheaper to build products. it's never been cheaper to build software. I think our GitHub Copilot is writing like 1 in every 5 lines of code. So it's getting cheaper, but I think it's that kind of like middle ground where you don't want to kind of like, build too much, but you also need to build great products. Like if you want to be $1 billion company or a $10 billion company, you need to have an absolutely world-class product.
Yeah, the question I asked you, I don't know the answer either. I mean, as much as I think about this like 24/7, I don't know. I honestly don't know what the answer is, because obviously I talk to lots of people in every buying category, and they're excited. They're out there looking. They're a little fatigued, but they know they can't bury their head in the sand. They want a better experience. They want to be more efficient. So I don't feel like it's purely about just reticence to adopt. So I sort of always go back to, this is an industry that is so global and has so many people who ostensibly do the same thing. But if you go to one country, they do it a little bit different, or different enough from another country that they just sort of expect people to cater to them a little differently, that it creates this fragmentation that is just part of like the furniture in the industry, essentially. And so I did want to address, I think you alluded to it, the AI part of this, because that to me is potentially a fork in the road from where we've been the last 10 years to where we might go over the next 10 years. The number you said is exactly the number, literally 20% is the number that I'm hearing from a bunch of different providers telling me that's how much we're saving on programming by using, some sort of program, some sort of chat, generative AI to build code for us. So, how do you think that changes things over the next 10 years?
I think AI will change everything. Like in the software world, it starts with, like you said, on the development side, it's writing 1 in 4 lines of code with Copilot, and it's only getting better. But also from like a product point of view, it's helping a lot. Like in our case, we wanted to be kind of careful not to get caught up in the hype of AI, because I think, in the software world you can, because everybody is talking about AI all through 2023. But for us, we looked and said, what's a practical example of how we could use it? And our engineers were kind of like really adamant about trying to build some AI that would help customers make better decisions. And I said, I'm not sure we're like to the point of where we should be. I'm not sure we're there yet, because like when we onboard a customer, they'll typically have 4 vendors is the average. So 4 rate sheets, let's call it, an airline, a steamship line, and two NVOs. Every single one of them has their own standard. Every shipping line has their own rate format. Almost every NVO has every airline. And to think that, if you look at the last generation, a lot of companies would have looked to BPO centers, and they would have said, okay, let's take all these rate formats, let's have the BPO center transform them into our standard and push them into our system. So we thought that was a great opportunity to use AI to take all of those rates and understand them, and then push them into an automated format. And no one's done that yet. So it's a super interesting problem to solve. But again, to your point about every country being a little bit different, almost every rate sheet's a little bit different. Like we'll ingest a rate sheet from NVOs, and on tab 6 and line 43, it'll be like, for South American exports, if you load on a Tuesday or Wednesday, there's an extra toll charge, and it's down a bit on line 53, and you've got to build the capability to understand all of that. So like it is a difficult problem to solve, but I think that's a good example of like a practical use of AI in the industry. And obviously there's lots of companies doing it with documents and things like that as well. But it shocks people when you say that, no one has built that yet, the capability to ingest any rate format and just push it into a system as an API. Even today, the vast majority, if not everyone, is using a BPO center somewhere to rekey the data. So I think, if that's a problem, in ShipAngel we're going to solve this year, and I'm sure others will too. And even that alone, it could change the cost of a BPO center for dozens of companies overnight. So I think from a product side, it's going to be really, really interesting, and I think it's going to happen very quickly, which will be very interesting in our industry.
Yeah, as talking about those lines, I can't even tell you how many times I've had a forwarder NVO send me their rate sheets and be like, "You're not going to believe this, what the difference between this rate and this rate is, or the rate that my agent is getting in this." And they send me a spreadsheet. Obviously, I'm not going to publish it. This is like all on background. They send me a spreadsheet and I'm like, I don't even know what I'm looking at here. This looks, you need to like explain to me what I'm looking at. It's so incredibly confusing. So crying out for that interface that's a little more friendly and usable.
Yeah.
On that point, I wanted to like just circle back to your previous experience at Containers and sort of meld that into what you're doing now. There is a lot of stuff, and we're going to be talking about this at TPM, by the way, where we have a session that's looking at whether shippers are going to be able to do their own bookings, right? Because the software will enable that, and forwarders won't necessarily need to have to do that for them. We're reaching a point now where shippers can do a lot of things on their own, self-serve, their own, use portals, whatever you want to call it. How do forwarders stay relevant in a market where you're providing shippers cool rate management software? They can get rates directly from online from carriers. They can make bookings directly through a very intuitive interface. Like, how does a forwarder stay relevant then?
Yeah, I think, the carriers especially have invested so much money in their own portals and have made a lot of progress. The way we think about it is we kind of think about each shipment in two ways. We call it transactional and non-transactional. So transactional is a shipment, a container, an LCL shipment, an air freight shipment from A to B anywhere in the world. Particularly on ocean, you can go online and you can do that on a carrier website today. And it's very difficult to see the long-term forwarder value for that when the carriers have invested so much. The second part, we call it non-transactional, is, BMW have 50 containers in Shanghai, but they have to come to a Chicago DC, be de-stuffed and delivered one pallet at a time to the dealer network in the greater Illinois area. There's obviously a big opportunity for the forwarders there to manage that non-transactional piece, where the ocean freight is just one leg. But, depending on who you talk to, the transactional piece is 50 to 66%, half to 2/3 of shipments. So if you fast forward to the end of the decade, will you see the transactional cargo being more and more moved on carrier platforms? And then the opportunity for the forwarders, I think, is firstly to accelerate their own digitization, and when they're selling services, to be able to digitize some of the add-ons. And I think some of the forwarders are doing a great job of that right now. And it's a little bit like an airline, where you go to make an airline booking and you get offered a hotel, or you get offered car hire. Similarly, when you're booking, you could be offered a DC service or an insurance add-on.
Yeah.
I think that's a big one, to be able to digitize other services. And then I think that the second one for the forwarders is to be really specialist, get really good at a specialist area. But it's definitely an interesting time. And I think, in some ways COVID slowed that down, because I think there's a lot of friction between the carriers and the shippers coming out of COVID.
For sure. Yeah. A lot of them turned to forwarders because forwarders were a friendly voice, friendly face. We are running up against time. I ask every guest, and by the way, there was a great question that came up about data privacy and compliance, which is another 5 to 10 minute discussion. So we'll have to talk about that at another time. But you have to tell me who your favorite band or musician is and why.
I think, given the fact that I'm Irish, the fact that he's just passed away, and I have a quick story about him. When I was in school, I worked in a hotel, and one Saturday morning when I was working in the bar, I thought it was going to be really easy because people were just having their breakfast. Shane McGowan came up to me and asked for a Malibu, and I served him a glass, and he was horrified that I didn't hand him the bottle. So he pointed to the bottle, and I gave him the bottle, and that's what he had for his breakfast. So I became a fan instantly, and obviously he's just passed recently, and he was like just a lyrical genius. So I'd have to say Shane McGowan and the Pugs.
Good. That's a great one. We will add that to the Logtech playlist at some point. So
awesome,
Graham, it has been great to catch up with you. Hopefully everyone found this as fascinating as I did. How can people reach out to you?
Yeah, just chipangel.com or Graham at chipangel.com.
Fantastic. Definitely encourage you to get in touch if anything he said was interesting to you. Graham, have a great 2024, and we'll definitely see you soon.
Yeah, see you all at TPM. Thanks.
Cheers. Okay, I'm past time. There goes my resolution to finish the show on time. Real quickly, dad joke of the week time. What part of the kitchen is the best at math? This should be obvious if you think about it. The counter. Obviously, I've just finished a kitchen renovation, so all this stuff is on my mind. So thank you to Graham. Awesome discussion. Really enjoyed it. Hope you found it interesting. Thank you to my producer, Nicole. As I always say, best in the business. Thanks to the whole Let's Talk Supply Chain team. And here's to a fantastic 2024 to everybody. Hopefully, we'll see you in Long Beach in a couple months. We have another great show, January 19th lined up. You're not going to want to miss that. So make sure you mark your calendars. Have a great weekend wherever you are. Hope you get some rest and relaxation and are charged up for next week.